There's been a real fascinating confluence of events in terms of retail investors and retail trading as a result of the pandemic in part. So you've got increased savings because people aren't spending as much. You've got government handouts. Some people are still getting paid by their employers. There's really no gambling to speak of right now, except for maybe e-gaming. And then the other thing is you've got these commission-free trading apps like a Robinhood. So you put it all together, and you've had some wild trading in the likes of Hertz before it filed for bankruptcy, or JCPenney and others. So what do you think of this phenomenon?
It's fun to watch. I've seen this a couple of times during the 1999, the tech bubble. Saw it in '87 to some extent. It's interesting, you know. And I remember back in '99, people were retiring to stopping being teachers to go into day trading, and that's what they were going to do. And so, in some respects, people are actually at home day trading right now. It can go on for a long time. You don't know when it's going to end. It usually ends. So these processes can go on for a long time. And there's that old saying, never underestimate the length of time it takes to go broke. It can take a long time.
And do you see it as sort of a small pocket of the market, and that the markets will just work itself out? Or does it need to be monitored, and should there be some kind of regulation to prevent it?
I don't think that you're going to be able to regulate gambling in the stock market. There's too much money to be made out of it. What's really interesting is that these day traders are sending signals into the marketplace, and all these electronic algorithms that are being run are having to adapt to it, and that may be exacerbating some of the huge volatility that we've seen, and it's upsetting the algorithms, and the algorithms won't actually really know. How do you program human behavior? And so it's fascinating to watch. We don't really pay much attention to it, but you can take advantage of it if it creates extremes on the ups and the downs, and you have a fundamental view of a company. They can create real opportunities for you.
I saw one of these retail traders saying, "Oh, this is easy. It's easy to make money, and it's easy in an up market, isn't it?" And this person may get a wake-up call at some point. But you alluded to the fact that at Davis Ray, you're long-term investors. You don't have clients like that. You don't engage in that kind of behavior. Not that you're looking down your nose at it, but sort of tell people your thoughts on the risk factor here with that kind of trading versus actual investing.
Yeah, one of the biggest faults in investing is overconfidence. And so it's kind of, when you see more and more people saying you can't lose, then you know you're getting close to the end. And that's really one of the things I think that a lot of investors are worried about with all this government support and stimulus. It's the same argument in '08, '09, that really when the government bailing everybody out, it creates a moral hazard and it encourages risky behavior. And you know, recently people have been talking about the Federal Reserve Board, you know, making rates zero, and that's maybe contributing to this speculative trading in stock markets and bond markets, for that matter. And you know, there's some people saying, well, should the Fed raise rates to stop this stock market problem? I said, no, the Fed's got other problems on its hand right now than worrying about day traders, I think.